there'll be enough buyers of gold in coming years, and I really hope that people are going to heed this warning about the risk of the financial system and the banking system and the bubble asset markets and actually own some real physical gold. Eventually it will be at a price which is 5 times higher, 10 times higher. I don't know what. I'm not forecasting. I'm just saying that the demand will obviously make the price go up.
Legendary founder and general manager of Matterhorn Asset Management and Gold Switzerland, Egon Von Greyerz, asserts that we are currently witnessing the conclusion of our existing currency and financial system. While he doesn't give exact predictions, he underscores the unavoidable rise in gold prices because central banks increasingly seek to acquire more gold. The price of gold surged to a fresh multi-month peak, reaching $20.62 during a speech by U.S. Federal Reserve Chair Jerome Powell. The momentum continued, propelling gold to a new 7-month high in the mid-North American session. Globally, central banks have been purchasing gold unprecedentedly, significantly boosting gold demand to 1,147 tons in the July-September quarter. This marks an 8% increase compared to the 5-year average, as the World Gold Council reported. The World Gold Council's latest report suggests that the historic pace of gold buying by central banks is expected to support gold prices substantially. Egon anticipates a gradual shift from the U.S. dollar as central banks replace their reserves with gold. China and India collectively dominate over half of the physical gold market, granting these influential Asian countries significant control over the potential direction of gold prices. The current scenario shows that gold is nearing record highs in China and India when measured in their local currencies. Egon strongly recommends getting hold of physical gold and ensuring it's stored in a secure location outside the traditional banking system. He underscores the importance of having direct access to your gold. Before diving into Egon Von Greyerz' insightful interview, subscribe to our channel and give this video a big thumbs up.
Central banks will move their reserves from a dollar to gold. I mean, that is inevitable. They will do. And that's what he said. But let him back it up also. But remember, as we said, you talked about U.S. treasuries. You know, there is the problem is the U.S. is issuing more debt than ever, and will need to even more so in coming years. And there is now no buyer of U.S. debt, especially long-term debt, except for the Fed itself. So the country is first issuing the debt, and then the central bank is buying the debt. That's the only way they can finance now survival. And therefore, of course, that's as we all understand, the recipe for disaster. Because no foreigner, no central bank now wants to buy U.S. debt. And it comes back to the point, and I think maybe we haven't talked enough about gold here, because gold doesn't solve the world's problems, but for the ones of us who understand the risk now, at least we can recommend to people and to our clients, acquire physical gold, hold it outside the banking system in safe vaults, with your direct access to it, and hold it also in safest jurisdictions, gold-friendly jurisdictions. I mean, that's going to be critical for anyone who wants to survive the next collapse of bubble asset markets. And that is coming, guaranteed. Sadly, only 0.5%, as we know, world financial assets are in gold, and people are going to buy the dips when the stock market goes down. And most people will lose a lot of money, and they won't then have enough money to buy gold. Oh, no, I'm going to wait for the stock market to recover. Then I'll buy gold. And then when it recovers a bit, they're not going to buy gold. And then it drops again. And then they're not going to buy gold. And that, becomes a vicious circle. So, but there'll be enough buyers of gold in coming years. And I really hope that people are going to heed this warning about the risk of the financial system and the banking system and the bubble asset markets, and actually own some real physical gold through you or through ourselves. We are probably the biggest, for high net worth individuals outside the banking system, we're probably the biggest company in the world now for that. And I say to my colleagues, we've been in this for 25 years. I don't think we've started yet. We haven't seen the beginning of real gold buying yet. We're still at the 0.5% roughly of world financial assets. If that changes to 1 or 1.5%, the demand for gold be such that it can only, as we discussed before, be satisfied by much higher prices. And I think that's to come. But we're not buying gold for speculation or for higher price. We're buying gold for protection, for insurance. And that's what we recommend people to do also. Forget about the short-term timing if it goes up or down today or tomorrow. Just buy it and sit on it and forget about the price also. Just hold it. That's I know it's not we're not doing it for ourselves. We're doing this, you are and we are, to help other people. That's the passion that we have. 100%. Certainly. Yeah.
Egon delves into the historical decline of the dollar and other currencies since 1971, underscoring a significant 97% to 99% drop in real terms when measured against gold. A startling comparison highlights the dollar's depreciation. Today's dollar would be worth less than 4 cents if evaluated against its value in 1913, when the Federal Reserve assumed control of the U.S. banking system. Since then, the dollar has witnessed a substantial loss, exceeding 96% of its original value. Egon emphasizes the importance of gold, asserting that it is entering a new phase of gradual strengthening. This is an opportunity for those holding gold to safeguard their wealth against economic volatility and uncertainties. A historical reference is made to April 2011, a period marked by investor anxiety over the declining values of fiat currency. During this time, the price of gold surged to a staggering $1,500 an ounce. This spike indicates a lack of confidence in global currencies, suggesting grim expectations regarding future economic stability. Let's get back to the interview.
Dollar and all the currencies, as we know, from 1971 have declined 97 to 99% in real terms, and we measure real terms in gold because the only money that's maintained is purchasing power. So, of course, the dollar will collapse. But the colleague of mine with somebody well known, also Brent Johnson, who has this dollar milkshake theory about the dollar going up first because of such a high demand for the dollar, basically. And I'm arguing that it doesn't matter if the dollar, or measured in the dollar index, you measure the dollar against 6 other currencies, which are all worthless from the point of view that they've all declined almost just under 100% in the last 50 years. So, there's no first prize for coming first to the bottom. And so it doesn't really matter if the dollar falls first or if the euro or the yen falls first to the bottom, because they're all going to do it, and they all can't do it at the same time. So it'll take turns. So the argument shouldn't really be about the dollar. It should be about the collapse of the currencies in real terms, and we know that's inevitable. And as I said, that is now going to accelerate, and this is why gold that we both understand well as a protection against what's happening in the world. Gold is now starting the next phase of acceleration. Fortunately, it doesn't just happen massively in a brief period of time, but it is going to be a gradual strengthening of gold and the other precious metals now in the next few years. It's not going to save the world, but at least the ones who hold gold will save themselves. It's very clear that the dollar against, and of course these BRIC currencies. I mean, I never thought that there would be a gold-backed BRIC currency. This year, for example, everybody talked about. I mean, that was just too optimistic. We know how difficult it is to put together an artificial currency, and if they are clever, which they are, I don't think they are going to have a gold-backed currency. You can't have one currency for 40 nations. It's impossible. It's much better that they all have a sound monetary system, and that they all have a lot of gold in reserves. I'm of the firm opinion that what we see now with central banks in the East and South, not the Western ones, are increasing their gold holdings because they understand what's happening, and they understand that that's the best way of protecting their own monetary situation. The West has not, Western central banks have not increased gold at all, gold holdings, because they prefer to print money. Why don't we all stop working and just print money, as Biden or Yellen say? Basically, they think America can just cope with anything, as you just said yourself. And therefore, the only way to achieve that for them is to print more money. And therefore, we can all stop working and just live on printed money. See how long it works.
Sure.
But what more importantly, the central banks, after especially the sanctioning of now Russia and the confiscation of their reserves held outside of Russia, in various banks and central banks, etc. I mean, that has obviously been a big alert for central banks around the world, not to hold dollars. You can't have your reserves in a currency or in a country that is controlled by the US, and the whole Western banking system is controlled by the US.
As we witness central banks accelerating their gold acquisitions and the historic pace of gold buying, coupled with the ongoing decline of traditional currencies, how do you envision the future of our financial system? Moreover, what steps can individuals take to navigate and protect their wealth in these changing economic dynamics? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.